Traders, Dennis Wilburn, the autopilot trader. Back when I was flying with the Navy, there was a term we used to use when things didn't go too well or they kept getting screwed up, and that was BOHICA. In the market today, we had kind of a BOHICA kind of day. If you know what that term means, just drop it down into the comment section on the YouTube channel, or if you're watching on one of the other venues, drop in the comment down there, because if you watch what happened in the market today, you know it was a BOHICA kind of day. You better count your fingers and toes, because I'm pretty sure that the bull trap just snapped shut. So let's go ahead and take a look at the indexes for today. There we go. Let's take a look at the first the Dow Jones. I'm going to be looking at the indexes themselves. Now, why do I say that the bear trap just shut down? This downtrend line here had been in place. We had a follow-through day on Friday, a little bit of a stalling day yesterday, that spinning top doji. And one of the two things is going to happen with the spinning top doji. It's either going to go above it, and in fact, that's exactly what happened today. We opened there, opened at the close of yesterday, ran up, hit the 34-day moving average and reversed hard, and spent majority of the rest of the day selling off. This is I categorize this as a bearish signal, in the tune of a evening star type of candlestick. And what do we expect happening from here? If the TSI continues as the momentum, if it continues to shift to the downside and crosses the downside, look for a pullback maybe up in the midsection of today's candlestick, and or just a continued follow through. It may gap down tomorrow, gap and go to the downside. If so, we probably want to be on board to the downside. I like SPX, same process, same picture that we're seeing here. We were nicely above the 8-day moving average, above the 20-day moving average. We basically had a spinning top yesterday, and look what happens today. Crossed below the 20-day moving average, sold off through the end of the day, and finished at the low, just about at the low of the day. Bearish engulfing on Friday's candlestick. And so this, again, evening star type of formation to the downside. If we drop from here, where the heck are we going? Well, there's a couple of ways to figure that out. One is to grab the Fibonacci extension here. The last time it did a drop like this, we went from here to here to here. And as you can see over on the weekly charts, where does that put us? That puts us at a potential 100% move. Would put us down here at, right there, 34.05. If we went down 78%, 35.20. So that's some downside targets for the S&P. Again, TSI just short of the 50-day zero line, and appears to be rolling over. Now, this could be a fake out. We want to be aware of that, because since the TSI did not cross, the momentum hasn't absolutely 100% shifted yet. So this could be a cross signal or a curveball being thrown on the bears. The bears start jumping on, shorting the heck out of this to the downside, and the bulls goes, but wait just a second, bucko. What we'll know is where do we pull back to? If we pull back to about this green line right here and then bounce, that could constitute a what? Higher low. So that's what we're looking at for that. NASDAQ, similar type situation. Have broken down stronger, harder than the Dow or the S&P. As you can see here, price action's looking like they want to get the heck out of Dodge, drop below the 8 and the 20, and we'll watch to see if we're going to continue down to the downside. I'll be looking at that tomorrow morning. If we gap down and do a gap and go, target that, to at least pull back to this past low here, and that would be a fairly significant move to the downside. Now, the Russell was looking a little bit stronger. However, we came right to the 8-day moving average and closed. We have a bearish engulfing on yesterday's candlestick, about a dark cloud cover over Fridays, and that's not absolutely perfect. I want you to know that that's not an absolutely perfect call on Friday's candlestick, because typically the dark cloud would be right adjacent to it. But we do have clearly a bearish engulfing on yesterday's candlestick. We held at the 8-day moving average. And so let's just double check that real quick. The 8-day moving average is at 1739 and some change, 1739, and we closed at 1738, so slightly below the 8-day moving average. I'll be looking at, if we gap down, look for a gap and go down to the downside. So that's what we're looking on the Russell and all the other indexes. Let's see what happens when it gets down here and retest. But right now, everything is looking like the bull trap has been sprung and the bulls are bleeding. So do you like your hamburger rare or well done? We'll see about that. 2 stocks to share with you really quick. Keep an eye on LI. LI had, this is the Chinese EV or electric vehicle company that had been doing just absolutely phenomenal, pumping up here. I'm not a big proponent of Chinese stocks. However, this looks like it could be pulling back where? Back to the breakout area, and here's another breakout area there. If we get back down to this level here, I have put in an alert at about $33.74, $34. If it gets down to that area, I'll take another look at it. It may hit the 20-day moving average and bounce, and so we'll just watch that, because right now it's looking pretty good. The other one is a battery play on LTHM. Lithium, that is not the name of the company. The company is Livent Corporation, but it is a lithium. It's having a little bit of challenge getting back up through the 20 and the 34 and the 50-day moving average, but it's consolidating. So now it could consolidate just back down to this uptrend line, or it could consolidate it back down to about the $22 level. So I'm going to keep my eye on this. For our autopilot trading members, we've got some trades, alerts in on this to trigger into a trade. But again, that's a couple of stocks to keep your eye on that may hold up and that are holding up better so far than the indexes themselves. And so that basically covers us for what we wanted to talk about today. And if you join us for the first time on the YouTube channel, please subscribe. Hit the like button and leave some comments. I love to discuss what's going on with the stocks you're picking. The other reason is, let's be honest. You're liking it, sharing it, and basically subscribing to the channel drives the algorithm, and it allows the content to be shared with more people. So help an old sailor out. We'll talk to you later. Aloha. God bless everybody.